Hey everyone, go ahead and grab your chai, settle in, and welcome to today's Explainer. Today, we are diving into something that trips up almost everyone. We are finally decoding that crazy alphabet soup of investment jargon. Specifically, we're looking at MF, SIF, PMS, and AIF.
If you've spent literally any time looking into investing, you're probably totally overwhelmed by these acronyms. Wealth managers and finfluencers just throw terms around like PMS and AIF, kind of acting as if everyone naturally knows exactly what they mean. Well, they don't. But by the end of this explainer, you're going to have absolute clarity on what these actually are, who they're really for, and why you definitely shouldn't let the jargon intimidate you. To make this super simple, let's think of investing exactly like taking a road trip. Imagine you need to travel from Bengaluru to Mumbai. Your choice of vehicle? Well, it depends entirely on your budget, how comfortable you want to be, and your specific needs for the trip. The investment world works in the exact same way. Some people want a simple, no-fuss trip, others want deep customization, and some, well, they want to take the exclusive, off-the-radar routes.
Okay, let's start with the absolute most common investment vehicle out there, the mutual fund, or MF. This brilliantly illustrates our transportation analogy. Think of a mutual fund like taking a really comfortable, reliable public bus. Thousands of passengers pool their money together to buy a ticket. And you just sit back and relax because a highly trained professional manager is sitting in the driver's seat handling all the heavy lifting. Now, you might actually recognize some popular Indian examples here, right? Things like the SBI Nifty Index Fund or maybe the Parag Parikh FlexiCap Fund. The absolute beauty of this vehicle and why it's so popular is that it requires zero daily market tracking from you. You don't need to be a finance guru or have any market expertise to ride this bus. The professional driver is completely handling the route. And here is the absolutely crucial point. The barrier to entry is incredibly low. You can step onto this bus for as little as 500 rupees a month through a systematic investment plan, a SIP. Because it's just so accessible, this is hands down the absolute best first step for almost all beginners in India. All right, let's step up the complexity a bit. Enter the SIF, or Specialized Investment Fund. Think of this as upgrading from that public bus to a really premium vehicle. It's got advanced features and, more importantly, a driver who is actually willing to take alternative routes to avoid bad traffic. It's built for people who already kind of know how the journey works. So unlike a traditional mutual fund that pretty much sticks to a predefined rigid route, a SIF is specifically designed to navigate heavy market volatility. If the markets suddenly plunge, say 20%, a specialized strategy inside a SIF actually has the flexibility to pivot, dodge that traffic, and even take advantage of the market correction. But because of that, it's really tailored for more experienced investors.
But yeah, here is the catch. The minimum investment for this premium vehicle is typically around 10 lakh rupees. So what does that mean? It means this tier is explicitly meant for experienced travelers who have already built up a decent amount of capital. It is absolutely not the place for complete beginners to start their journey.
Now imagine you are just completely tired of riding with other people. You want to ditch the bus entirely and hire your very own private chauffeur. That, my friends, is PMS, or Portfolio Management Services. Instead of pooling your money with thousands of others, a professional manager builds a highly customized ride exactly to your personal specifications.
You might have actually heard of some of the popular Indian providers in this space, like Marcellus PMS or Motilal Oswal PMS. The major game-changing advantage here is direct ownership. The stocks and securities are held directly in your name, not just as units in some massive pooled fund. Basically, your private chauffeur is driving a car that you own outright.
Of course, as you can probably guess, hiring a bespoke private chauffeur isn't cheap. The entry ticket for a PMS is generally a pretty steep 50 lakh rupees. This high financial barrier makes it a highly exclusive tool. It's primarily designed for high net worth individuals who actually need that intense level of bespoke customization. Finally, we reach the most exclusive category of all. You've completely outgrown the bus, you're over the premium vehicle, and even the private chauffeur isn't enough. Now you want access to private, VIP roads that normal investors literally aren't allowed to drive on. That is the AIF, or Alternative Investment Fund. It's all about accessing entirely off-market opportunities and private companies. To put this into perspective, AIFs are the vehicles that backed early startups like Swiggy, Ola Electric, and Zepto way before they were widely known to the public. You get access to pre-IPO companies, but a really heavy caution here, while the potential returns are way higher, you are taking on extreme risks. Plus, they have very low liquidity, meaning your money is completely locked up for years. You can't just get off the ride whenever you want.
And the toll to access this completely private road? A massive minimum investment of 1 crore rupees. This solidifies AIFs as the absolute peak of the wealth pyramid. It is strictly reserved for highly sophisticated, wealthy investors who can easily absorb substantial financial risks without breaking a sweat.
All right, let's just pull back for a second and summarize this whole tiered progression we just went through. You start with the mutual fund at just 500 rupees. Perfect, absolute best starting point for beginners. Then, as your capital grows, you might look at a SIF for 10 lakh. High net worth individuals might eventually seek out a PMS for 50 lakh. And at the very, very top, sophisticated investors might put 1 crore into an AIF.
Now listen, if you are sitting there feeling a little bit of FOMO because you don't happen to have 50 lakhs sitting around, let me puncture that right now. For the vast majority of people tuning into this explainer, you definitely do not need a PMS or an AIF. A simple mutual fund is perfectly sufficient to build serious wealth. Actually, for the best possible starting point, I highly encourage you to check out our first explainer, where we do a deep dive comparing Nifty Bs and Nifty Index funds. That is exactly where you want to begin.
I really want to leave you with this core, grounding philosophy today. Successful investing is usually not about finding the absolute most complex, jargon-heavy product out there. It's really just about staying disciplined and giving your money time to compound. Think about it. A public bus driven steadily for 20 years will get you so much further than a Ferrari that crashes on day one, right?
So here is my final question for you. Are you letting all this intimidating alphabet soup stop you from taking that incredibly simple 500 rupee first step toward your own wealth? Don't let the noise freeze you. Start simple, stay totally disciplined, and make sure to catch our next explainer as we continue to decode the financial world together. Enjoy the rest of your chai.